What is going on, everyone? Thank you so much for opening this video. This is Trading with Saincha. Welcome back to my channel. If you are new, please hit the subscribe button, like the video, and follow me on Instagram. So in today's video, I'm going to be showing you guys how to use the Fibonacci retracement levels. You can incorporate the levels into your trading strategy if you want, or you can just simply use the strategy that I am showing here. And if you want to learn more about this and how to capitalize on this, you can just easily DM me or text me, right? So basically, Fibonacci retracement levels are horizontal lines that indicate the possible support and resistance levels where price could potentially reverse direction. So they are considered a predictive technical indicator since they attempt to identify where price may be in the future. These are these levels that we are talking about, you guys, right here, right? And my levels are like this because my area of focus is right here between the 50% level and the 61% level. This is where I am looking for entry opportunities. I will be showing you exactly what I mean when I say this as the video continues. So stick around and let's get into it. Okay, so in order to be profitable using the Fibonacci retracement levels, you need to understand the trend of the market. So you can only trade the Fibonacci retracement levels when the market is trending. If it's not trending, then you can't trade, right? So like on this chart right here, we have a downtrend. So how would you place your Fibonacci retracement levels? So if the market is moving on a downtrend just as so, right, your main goal is to place the Fibonacci levels on the impulse wave, right, not on the corrective structure. You have to place the Fibonacci levels on the impulse wave, okay? Because what exactly are you measuring? You are actually measuring the corrective structure. This is what you are measuring. You want to know when will this corrective structure reject, or where, not when, rather, but where, right? You want to understand where will it find, in this case, since this is a downtrend, where will it find resistance? Where will it find resistance? And then if it's moving on an uptrend, you want to know where will the corrective structure find support. So with the Fibonacci retracement levels, there's what we call the golden level. That is the 50% level and the 61% level. That is the golden level. So here's an example here. If the market is pushing on an uptrend like this, remember I said you place your retracement levels on the impulse wave. So where the impulse wave started is where you're going to first place the Fibonacci retracement, and where the corrective structure started, or where the impulse wave ended and it was the start of a corrective structure, this is then where you will end the retracements, right? So basically you start here, you end here. You start here, you end right here. That is how you are going to place the retracement levels. So here is an actual example. You're going to start the retracement levels right here, and then you end it right here. This is where it stopped. This is where it rejected, right? So now what do you see here? Do you see the golden area or the golden level? This is where the 50% level and the 61% level meet. So this is where the market can possibly reject and push to the upside, right? And then here's another example here. Let's put another one. We start here and then we end right there. Do you see that? Pretty much close. So if you had entered a trade somewhere around here, you would have been profitable because, as you can see, market pushed up. So you're looking for buys since this is an uptrend. Like I said, you only trade the trends, right? You only trade if the market is trending, right? Look at this. So let's say that this is a running market. If the market was somewhere around here, I'd be looking for buys, right? after a proper analysis. Another thing that would make me look for buys, I'm just playing around now, is this trend line. Look, this trend line, because I just think that the market would just bounce here, and then push up. But then this is something that I drew. Now let's have a look on a real life chart. Okay, so here's our real life chart, right? I'm gonna first show you guys the impulse waves. The first impulse wave is right here. Okay, before we get here, you guys, so if you are looking for a good broker, I'd like to introduce you to COINEXX. It is the best broker that I have personally used before. They offer low spread from 0.0 pips. It's really amazing. They offer ultra low commission of just $1 a lot, and their withdrawal is very easy. Withdrawal is processed within 24 hours. Depositing is even easier. So they will give you also 250% matching deposit bonus, meaning that if you are going to deposit $100, $1,000, they're going to match that $1,000 as a bonus, right? You can easily deposit in crypto. You can fund your account with Bitcoins, Litecoins, Dash Ethereum, and more. And there's also no transfer fees. They don't charge for transferring your crypto into their wallet, all right? So click the link in the description below to open an account. The link will take you straight to their site. This is how it looks, you guys. Everything is simple. The site is very informative about the broker, and you can learn so much right here. So basically just read and then click on open an account. So this is where it will take you, and you can just fill up everything right here. I hope you will no longer be struggling with looking for a good broker. I've plugged you. Let's continue. Okay, so I'm gonna show you guys some of the impulse waves that are right here on this chart, and I think are tradable with the Fibonacci retracement levels. So the first impulse wave is this one that I see, and then I see another one right here. Even though, you guys, it takes some deep understanding of how the market works, I did this one because it's a bullish impulse wave right here, and so I do also want to make an example of the bullish trend when you are using your Fibonacci retracement levels to trade, right? So another one that we have is this one right here. It's very good. And then which one can I use as well? I want to use this one too, so that I can show you that not every impulse wave is going to give you the best trades when it comes to trading using the Fibonacci retracement levels, right? So I just quickly want to show you. Another one would be this one right here. This is a nice impulse wave. Okay, so remember, you guys, you have to do your overall analysis before you can trade using this strategy. So here you go. Let's first test the first impulse wave and see. Remember, this is the corrective structure that we are going to be measuring. And then for this one, this is the corrective structure that we are going to be measuring. And then this one, and then this whole corrective structure here. So let's just measure and see how it goes. All right, there you go. So as you can see, I started the Fibonacci retracement level right here, and then I ended it right here where the corrective structure started. I'm going to remove this so that you can properly see. So what happened here is we had the corrective structure push up, but it did not enter our golden zone where we were looking to take entry points, right? Where we were looking to take some trades. So meaning that we would have lost a selling opportunity, which is fine. That is a part of trading, right? So we move on, we look for another opportunity or another setup. Let's go. This is the bullish setup, because this is an impulse wave, but it's a bullish impulse wave, right? Right there. Let me zoom in. All right, wonderful. So with this example, you can see that the market impulsively pushed up, and then our corrective structure came back and entered the golden level, right? So this would have been an amazing buy, a very good buy, and market pushed up, right? Another impulse wave would be this one. You can test this one as well. Right here, the impulse wave started right here. And let's test for this corrective structure. As you can see, we had the market enter our golden level, and that is where the market pushed up again. So you can see that the retracement level is in fact powerful when you do your analysis correctly, because your analysis must tell you where to enter and when to exit, right? Or where to exit. So it's very important that before you do all of this, analyze and then mesh everything up so that everything makes sense when you are entering your trades. Here's another wave right here, and then it stops right there. As you can see, we have the corrective structure enter our golden level. But now with this example, as you can see, right here, we have a huge consolidation. So if you had entered a sell somewhere around here, the market would have been just playing around and, creating unnecessary drawdowns, and just it was a very huge, big corrective structure, but overall the market eventually dropped. So that's why, again, it's important to analyze so that you know where to place your stop loss, you know when to exit as well, right? So as you can see, market dropped after hitting our golden level. Another impulse wave right here would be this one, the largest one. The reason why I said this one is good for our example is because I want to show you that it's not always going to be smooth and just easy like that. You're going to have moments where you take an entry as soon as the market gets into our Fibonacci golden level. And then after taking the trade, you'll see that, oh, it's going well, my sell is going well, and then boom, market reverses. But don't panic, as you can see, boom, market reverses. So as you can see, market eventually sold for some time right here and went down, but it was a struggle from a sell right here up until, the market eventually decided to go down right here. So it's not as easy as it looks, but once you get used to the market and you practice the strategy, it can be an easy way to make money out of the market. All right. I hope you guys were able to understand this video. And if you feel like you need more lessons pertaining this strategy or anything regarding Forex, you can easily DM me or WhatsApp me so that you can book for your online lessons, as I do offer those. Thank you so much for watching this video. Bye.